All right, let's talk tech stocks. And you can't go anywhere without talking about NVIDIA. So I've got a theory on NVIDIA and why it's valued so highly. The GPUs they make, it's similar to when Apple came out with the iPhone and the iPad and the iPod. There was only one company you could buy the iPod from, Apple. Every other product was inferior, and that's what NVIDIA had last year. So the only place you could buy your GPUs for your AI engines was NVIDIA. So they became the Apple of chip stocks. That is why they got to the valuation they did, because if you wanted access to that industry, there was only one stock you could buy. So even though people said it was overvalued and worth too much money and it's $3 trillion stock and all this stuff, it doesn't matter because it's the only stock you could buy. And so for fund managers, imagine being asked by your investors, oh, so, you didn't buy NVIDIA? No, I didn't buy NVIDIA. Why didn't you buy NVIDIA? Well, it was really highly valued. We thought it was overvalued, blah, blah, blah. You're going to be fired. So fund managers have no choice but to buy NVIDIA. No choice. They have no choice. None. So anyway, that's the main guy. And NVIDIA's caught up with all the big guys, Apple, Amazon, Microsoft, you name it. Its valuation, its market cap is right up there. And yeah, they sell the GPUs. Apple only sold the iPod, and then they added the iPhone and other stocks. But that to me justifies NVIDIA's price. Okay, so this is a handy tool. This is finviz.com, and it maps out in a lovely grid, in a beautiful grid where the size of the box represents the market cap, and that market cap is represented in the S&P by how much of the S&P they are. So for example, NVIDIA, Microsoft and Apple are around 5 to 6% of the S&P, and that's why you see those boxes so large. Whereas you start going down to Tesla, Meta and Eli Lilly, and they're a smaller percentage of the S&P because their market cap is less. So the S&P is a beautiful representation of market cap. Okay, so the S&P, you'll see the biggest boxes are tech companies. So where do we go from here? As investors, what's the future going to hold? Is now that NVIDIA is 3 trillion, is it going to go to 6 trillion? Probabilities would probably suggest no. So where do we go? Well, let's just delve in to the funnel that is the chip stocks. So I've got a list here. At the top is obviously NVIDIA. Then you've got companies like AMD. We've probably seen that on some of the computers we've bought, the AMD chip. Intel, a underperforming government bureaucratic, basically dying company. And that ship is firmly heading towards beaching itself into nothing. But is it a value play? Will they be able to turn it around? And I believe that'll all depend on their management. Anyway, next one. Qualcomm, which is a good company. AVGO, which is Broadcom. MU, which is Micron. Marvell, and then probably AMAT Industries is probably the last one in the list. So that's kind of my top down. I wouldn't go lower than that because just the market cap isn't enough. So you haven't got the liquidity. There are others like, so there's NXPI. It's a small company. There's ADI that they put in the semiconductors, and Texas Instruments. It shows you here when you hover all the stocks they deem to be part of the semiconductor sector. So this is really handy if you're looking to have a look at what companies are in each sector, because there's also an element of you don't want to own NVIDIA, AVGO, AMD, QCOM, TXM, ADI, because you're just in the same company. You're in the same sector. And if that sector is hit hard for whatever reason, you're totally correlated. So from there, what I would do is, I really like this tool here. It's called totalrealreturns.com. And you can put into the kind of search engine your stocks. So I have added NVIDIA, AMD, which is Advanced Micro Devices, Intel, Qualcomm, Micron, Broadcom, Marvell, Applied Materials, and Skyworks, which is SWKS. Those were the ones I went to represent the semiconductors. And I've got the S&P in here just as a comparison. So you can go down. Now, this is the total real return for those stocks since 2009. As you could have guessed, because of the way NVIDIA has been performing, it's right up here at the top of the chart. It wasn't always the case. And then in second, you've got AVGO, which is Broadcom, and so on and so forth down. It's a great way to represent relative performance. Say you have a theory that the laggards will catch up and the outperformers will underperform. You could, for example, do a spread trade where you sell NVIDIA and buy Intel. And that would be this low orange line against this top blue line. Or you could bet along the same theme of Intel going to zero, so you could sell Intel, and you could buy NVIDIA because you believe it's in the strongest position and will continue to be so. It's up to you, but this chart represents a good snapshot of where they're all at. If you scroll down again, you get overall return and then their annual trend line. But the one I like the most is if you had bought $10,000 of these stocks in 2009, so the S&P would be 55,000, including dividends, including stock splits, including everything. NVIDIA, that 10,000 would be 3 million. So that's quite a stark contrast. The S&P is known for outperforming, yet 55 grand versus 3 million is quite a substantial difference. I think for decades, NVIDIA really just flatlined. So it still amazes me after 30 years of trading how something like that can happen. If you plucked NVIDIA out of the bag in 2009, put in a few grand, you could now be sitting on millions of dollars. Anyway, let's scroll down. 200 grand for AMD. Intel, after holding it from 2009 to 2025, you're at 13 grand. I mean, you have not even kept up with inflation. You're nowhere near inflation. Qualcomm, 37 grand. Micron, 100. So Broadcom's done well. You're at $1 million and a bit. And then the others, 62 grand, 110 grand. So you see that most underperform. Not underperform. Most do okay. But NVIDIA just literally blew the doors off. Blew the doors off, blew the walls off, blew the floor out, you name it. That one stock has literally changed the destiny of the stock market. If you scroll down a little bit more, there's a nice bit, if you like charts and kind of, not charts, if you like grids. This one shows you annual performance. And the bit that I like, especially to notice, is 2022. So this line here, I mean, if you pull this up yourself, you'll be able to see the numbers because I'm sure you can't see on your device. But in 2022, every single stock was down around 50%. NVIDIA was down 53%. AMD was down 57%. The least down was Broadcom at 18%. So it's the crucial thing when investing. Every now and again, you will be down, 50%. And the bounce back in 2023 was you were up in NVIDIA 227%. So the key is holding your nerve. You've bought a company, you've bought part of a company, you haven't bought a stock price, you have bought a part of a company. And that's why it's so crucial because you're not involved in that company, I personally go for a wide mix of companies so that I'm not relying on any particular one or any particular management or any particular product. I put my best foot forward into the best companies I can find. And just that line in 2022, just 3 years ago, you were down 50% of your money. And the key was in holding strong, not being leveraged. If you're day trading, you're trying to make the most of those falls. If you're swing trading, you're trying to get your swings right. And if you're an investor, It's all about holding your nerve. Scroll down, and some companies you can see they started. I mean, in 1984, I didn't know this. I think Intel was around. Oh yeah, AMD was around in 1984. I did not know that. Intel was around in 1984. So was Micron Technology. I had no idea that company was around in 1984. So without going into the real nitty-gritty of the stocks, you can get just a broad idea of how they perform and how they perform relatively. And that chart shows it quite nicely, as does that grid. And then the next section here is the drawdowns. So you can kind of get an idea that, like here, when one's down, they're all down. Well, no, that's not true. In 2022, they were all down. No, NVIDIA or not, it was down 50%. And that's another thing to remember, that even the best stock in the world, when the market sells off, they all hold hands. And then shows you here the worst drawdown, and that's your comparison for those stocks. It's a really great tool. I really like getting that snapshot. And don't be fooled by what people are telling you. Look it up yourself, and because often people will say, oh, NVIDIA's blah 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 hasn't outperformed gold or something, and what they've done is they've cherry-picked the start date. They cherry-pick the start date of when they start their chart from. If you move it back or forward a year or two, you'll find the narrative inverted. But I see it so often. People cherry-pick that start date, so just be warned. Okay, so those are your stocks. NVIDIA, number 1. Broadcom, number 2. Intel, the laggard. For me, I do have a small position in NVIDIA. I do have a small position in Broadcom. I even have a small position in Intel. The key for me and why I'm in all of those stocks is that they're front and center. They are volatile, and because I actively trade, it gives me opportunities. So even though I doubt NVIDIA will double in the next year or 5 years, I don't think it will double. Will it ever double again? I'm not sure. But what I can be sure of is that they're going to be volatile, and that for most traders means you can make some profit. So that's my takeaway on those. We'll look at another sector next time. Any questions, please just ask, because I don't know what you don't know. That's it.